To think about these issues, we are joined from Dubai Bavik Mita, Vice President for Research at Century Financial. Bavik, thank you so much for joining
Thank
us.
you.
We are at Ashraf watching oil companies, gas prices, LNG prices, and also we are watching steel and iron. What are you watching at your end?
Well, to start with, we are looking at the big US earnings from Chevron and Exxon. A few other US downstream operators are also scheduled to announce their earnings for this week. So we are particularly focusing ourselves as to what is going to be their announcement regarding the capital spending, as well as their expectations for the oil price trajectory. So, with the events that are currently happening in the Middle East, the Red Sea crisis, as well as the recent attack on the US troops in Jordan, that gives a very strong and solid support to the oil prices, the energy markets. So, it would be interesting to see as to how these companies would like to spend in light of these current events that are happening in the geopolitical space.
What about LNG? We are watching gas prices since last week, and there has been a talk about the fact that gas prices are at the lowest level. The US has become the biggest exporter of LNG. Yesterday, however, we heard from US President who put restrictions on exports of LNG for environmental reasons in this case. What will those restrictions mean for this commodity and how should we be watching it from now on? And do you think we could have a new energy crisis in this regard in Europe that could impact the prices?
To answer the first part of your question, right now, if you look at the LNG markets, not all the participants are really focusing on the supply side. The major emphasis over here is a very, you could say, slower growth in the demand. So we are living in a scenario where we have seen milder winters across the entire globe, specifically European nations and even the host of American regional cities where the winter doesn't seem to be that much strong. So the demand side of the equation itself suggests that there's not much anticipation of big optimism in the pullback in the prices. The European gas inventories continue to remain very strong because of the aggressive restocking that happened last year, post the Russia-Ukraine war. So that is something. The demand side is something that is dictating the market. Not much will be dictated from the supply side of the markets as far as LNG is concerned. Uh, the second part of the question, if you talk about the overall energy prices, how the conflict, how the global markets are going to react, again, we are of the view that cooler heads are likely to prevail as far as the geopolitical thing is concerned. But having said that, for the spike of Brent oil prices towards 9,500 cannot be ruled out because we might see some retaliatory action by the US and the Western forces in because of in light of the current attack that has happened. But the overall narrative of slower growth for the commodities does remain in place.
What about steel? We are watching it. Last week we were watching lithium because of the batteries. We are also watching lithium this week, but we will have a different issue to be discussed about batteries and EVs later. But steel, the metals that we should be focusing on 24, what are they? If we don't want to see in the medium and long term, at least in the short term, what metals we should keep an eye on and why?
Uh, Commodities, the base metals, they continue to be a strong China play. So we saw last week what happened with copper, steel, aluminum prices. They were up in the range of I think 3 to 5% because of the Chinese announcement regarding addition of something like 150 to 180 billion dollar of liquidity in the form of cutting of the reserve requirement rates. So again, if we have to watch out for the base metals, I would suggest the biggest play would be on copper as well as iron ore because what has happened is the Chinese real estate industry continues to be in very bad shape. Sentiment wise, the only thing that can change is host of fiscal and monetary measures by the Chinese central bank and the Chinese authorities. So for the immediate short term, iron ore and copper is something that we would be focusing on.
What about food commodities, especially given what's happening in the Red Sea and many shipping companies rerouting their ships? Do you think we should be focusing on this at this stage, especially with prices of many food commodities reaching their lowest level in 2 years? So should we be focusing on them at this stage, and can we expect them to increase?
As far as the food commodities are concerned, we've had a very, you could say, an aggressive dumping from Ukraine, because majority of these European countries, they bought heavy amounts from the Ukraine authorities in the Ukraine state-owned companies. Now that has basically dampened the prices. We do not expect any major impact. I mean, if we talk about the Red Sea shipping and the food, we do not expect any major impact at this point of time.
Bahavik Mitta, Vice President for Research at Century Financial. Thank you so much for having joined us from Dubai.
Thank
Have a
you.
nice day. Thank you so much.
Thank you.